Eric Mwadid on Mwadid.com with a follow-through after our phone conversation. Let's take a look at some of the things we were talking about just to rehash. I think I covered pretty much most of them, but take a look at my notes here while we were talking. And so the first question was how you can determine your entry point. And as I discussed earlier, it really is very simple. What we do is, and keep in mind, this is all, there's no fixed way of doing this. This is just my method of doing it, and I hope it makes sense. You can use any entry point, but the way I do it is I first and foremost figure out what the monthly entry point can be, and then I go to the weekly and then the daily. And the reason, as I stated earlier, is because you tend to find that your monthly chart is going to give you the earliest entry level. So here we can see that just at about, and by monthly buy point, of course, we are talking about the previous recent monthly closing high. And so here we see this being at about 38. So this was, to me, and is still the most logical way to look at this instrument. The fact that it is moving above this monthly closing high shows that it is breaking out. Now, if the stock has already moved above your monthly buy point, of course, your next chart that you can go and try and figure out a logical place for a buy point is the recent weekly closing high. And here we could see this could probably be at, let's just call it there, at about 41.50. So that's where would be the next buy point. And still, that's a logical place to enter. And if that doesn't give you, if you miss that and you want to chase the trade, you can go figure out what the 52-week daily closing high can be. And that still is, there's nothing wrong with that. And the reason why I say there's nothing wrong with that is, for example, if you take a look at this instrument, if the stock is going to do well, and let's say if you bought it here based on the monthly closing high, so if you bought it here based on the monthly closing high, let's assume that there was another weekly closing high somewhere here, and then there was another daily closing high somewhere there. If the stock is to do well, you can see that all of those buy points, in theory, still gave you a nice entry into a stock that went higher. So there's no wrong way of looking at it. My personal view is that you are better off finding the earliest buy point, so that by the time the stock gets to the next potential buy point, you are already in the black or in positive, and so you can really ride the stock as it goes through its volatility, and so you're not going to be, I guess, shaken off as easily as somebody who just recently bought the stock. So personally, I prefer, and I encourage you to continue using the monthly chart to determine your entry point for a quality breakout. And so what you'll find is that once your alert has been triggered, and the good thing about setting these strategies, so once, let's say here, if you were watching this stock while it was trading here in the lower 30s, you would have set an alert at, let's say, $38. And once you set the alert and forget about it. You really don't have to watch it every day, because if you look at your trading system or your quote system, at some point you're going to get an alert. So when the alert triggers, now you can go back and check the chart. And so I prefer to set it and forget it. And while the stock is either the stock could break out down the road or never, so you set it and you move on to other things. Now, I also discussed the idea that you want to buy within 5% of whatever pivot or buy point you determine. So let's say if you are going to trade this, then plus 5% of $38, which would be 38 times 1.05. So between 38 and 39.9, that's your 5% window. So 5% window, and you can see even as of right now the stock might look extended from a visual standpoint, but from the 5% window after the breakout, you can see the stock is trading at 39.95 and our buy point is 39.9 39.90, anywhere between $38 and, in theory, 39.90. So this helps you gauge how far extended the move is. I would call it here still within the 5% buy point. And that just gives you a reason to continue watching a stock, or at least to show some interest. Otherwise, anything above 5% could still do well, but this helps you and keeps you disciplined so that you don't go chasing stocks. Keep in mind, after a stock has moved, let's say 5%, 10%, it's not unusual for there to be a drop, sometimes even to test the pivot or the buy point. So you don't want to be shaken out by buying too late. So in theory, you'll see this a lot, and this is the idea that a stock will break out and it can actually even eventually come and test the buy point zone, hold, and move higher. It happens a lot, and you see that a lot. So I would rather you buy it within the 5% window, just to give yourself some room from some volatility without being shaken out. And again, once the alert is triggered, the trade is live. So let me emphasize that. I get that question a lot, and once your alert has been triggered, you don't have to wait for the end of the week or end of the day or end of the hour. The trade is alive, and you can take the trade as soon as you want. So you don't have to wait for the end of the month just because you're looking at a monthly chart. You don't have to look at the end of the week if you're looking at a weekly chart. You don't have to wait for the end of day if you're looking for on a daily chart. The theory here is that once the alert has been triggered, the trade is live, and in theory, it's a theory, or at least it's the practical approach. The practical approach is that the trade is live, and now you can take your position in the breakout if everything that you are watching checks out as the stock is breaking out, with the idea that the stock would continue higher. Of course, we know that is not what happens all the time. Stocks are volatile, and who knows, sometimes some will fail and some will be successful. But the theory is once it breaks out, you don't have to wait any longer. That is your trigger that this trade is alive, and you might be looking to take the trade if everything else checks out. Now if you take a look at this stock, MTSI, just to rehash and to go back to some of the things we discussed, is we decided this was not what we were looking for in terms of an ideal buy candidate, because the MACDs are not at 3-year highs, and we can see here at the very least the RSI is not above 69.1. So even though the stock is breaking out, the price breakout looks good, the technical picture did not confirm that. And we also took a quick look at this nice period when the stock was trading well. So we did discuss this period here, which is the strongest move in the stock in this time frame here. And that move, that nice move from, let's call it about mid-20s to the 40s here, or the lower 20s to the 40s, took place. I just want to share this with you so we can have this in the video, that the breakout took place here. And we're talking about this time period in October, November of 2014. That coincided with the RSI punching through to all-time highs on the MACDs. MACDs punching to all-time highs, RSI also moving above 61.8, and I told you that this is what we are looking for, stocks that are breaking out to all-time highs, and also for the first time seeing levels above 61.8 on the RSI. If we can find stocks doing this, and also coupled with the fact that the MACDs meet our minimum requirement, that is where we are going to see the best chance of riding some good stocks. So yes, not many stocks are going to be doing this, because in a way you almost do need to see winners, or do need to see IPOs so that you can get this type of a breakout. Otherwise, some of the stocks in the market have been trading for a long time, and so they are going to have traded above 61.8 at some point in their trading history. But if you can find one that is doing this type of a breakout, and on my YouTube channel there is a video series called 5 Breakout, and we'll discuss this as we continue with the mentorship here. You can see that this is predominantly where we are going to get this nice type of action. If we can find stocks like this, I would give precedence to this type of behavior, where a stock is breaking out and moving above 61.8, and eventually it moves above 69.1 at some point, and that is what we want. We want stocks that are breaking out for the first time to all-time highs, and for some reason they tend to be the most powerful period in a stock's trading history. As a case in point, take a look at Facebook. So we are taking a look at Facebook monthly chart, all data monthly. Now, we did not discuss this in our phone conversation, but you'll see that there was a breakout in Facebook. You can draw it this way, you can draw it that way, but what I want to emphasize is take a look at this move. The sharpest move in the stock was during this period here. So this period here was, in my opinion, the sharpest move in the stock, and it coincides nicely with the monthly RSI jumping to all-time highs, also jumping above 61.8 for the first time ever. Eventually it went on to break out again, so there was another secondary breakout, and that breakout in late 2013 was here during this breakout, this period here, and that also pushed the monthly RSI above 69.1. So you can see both breakouts so happen to be one, the first one was above 61.8, second one above 69.1, and that gave us a nice thrust in the stock. We can also see here that during that period, both the breakout here and also the secondary breakout correspond nicely with our MACDs, also moving to all-time highs. So during this breakout here and here, this breakout here and this breakout there. So we see that the 5 breakout or breakout above 69.1 for the first time tends to be the most powerful. We also talked about the need to not be scared if a stock's monthly RSI or even daily or even weekly RSI is above 69.1, and I mentioned that take a look at the Nasdaq. Once it moved above 69.1 in 2013, sometime in October, sometime in the summer, about June, July, that breakout, in fact even early in April here, once it moved above 69.1 during this period here, the market stayed and went, the general market in the US went on a major run to all-time highs on the Nasdaq, the Dow, and the S&P 500, and that corresponded very nicely. And as a perfect example, you can see that during that entire period, this entire run in the market, the run-up took place as the RSI held above 69.1. So there is your magic number. And once the market came off that 69.1 level, we did see the market make a short-term high, as you can see there. So holding above 69.1 is not the time to be scared, it is the time to celebrate, in other words. I also discussed GPRO because GPRO gives a nice explanation as to the idea of holding stocks that are trading above 69.1. You can see here on the daily the fact that there was a breakout. So this was the previous daily closing highs, and then there was a breakout in price here. Let's call it at under 40, about $47. That breakout was good enough to take the stock. So we're talking about this period here, this breakout. The stock moved and jumped to all-time highs on the daily RSI. So that jump to all-time highs on the daily RSI for an IPO was a sign of strength, and that's why we had set an alert at the time there in 2014. So GPRO jumped to new highs, and it stayed with its RSI above 69.1 until this period here. So let's call it at about higher 40s to the mid 80s. Throughout that period, the RSI held above 69.1. So we can see that there was also another breakout intra day to day. After the stock settled down, it broke out again here after a couple of days of rest and jumped higher. This breakout took place with the RSI also jumping to all-time highs right there. So yet another move to all-time highs, which might explain the explosion in the stock price, moving from a buy point of higher 60s to the high where the stock was trading in the mid 90s in a couple of weeks. So that what I'm saying here is, just because a stock is trading above 69.1 doesn't mean that we have to be scared of owning such an opportunity. And just want to emphasize here that the breakout that took place during this period here corresponds nicely with the main MACD jumping to all-time highs. So we need one of the MACDs to move to all-time highs, which is exactly what happened. And also we can see that the breakout that took place just under 70, so the MACDs jumped to new highs. So both periods we saw the MACDs jump to new highs, and the RSI also jumped to fresh highs. Even though the RSI was trading in the 80s, the stock went on to record a nice run in a couple of weeks. So let's discuss one other stock that we also looked at, XRS, and we see that we missed the monthly breakout. So it already broke out by the time it's coming to your attention there, so we don't want to chase it because it's more than 5% from our purchase price. All right, the thing that I was pointing and we were discussing is the fact that even though it broke out and looks good, problem is that the MACDs are really behind. The MAC, even though the stock has had a nice move of the last couple of months, just now is when we are seeing one of the MACDs moving to new highs. So I would say not the best quality, because you want the breakout. And let me explain that. Let's go back a couple years here. Let's go back about 6 years, and you can see again another explanation as to what happens when a stock breaks out. For example, let's take this time period here in middle of 2013. Price breakout, and that price breakout generally brings a stock that was trading sideways. Let's throw it somewhere here. It was trading sideways generally during this period here. So sideways action. And hold on a second, let me get this right. So it was sideways here until it broke out to new highs sometime in summer of 2013, which corresponds with very nicely with the RSI also moving here to new highs on the monthly chart. Also the RSI jumped above 61.8 for the first time ever. And again, you can see this is just keeps showing up every time, and then you get this explosion in price from nothing to an explosion. What triggers this explosion is my theory that it is this breakout here. This first move above 61.8 tends to be magical, and then you add on to the idea that it again increases the momentum by jumping above 69.1, and it stays above 69.1 for a couple of months, which is during this entire period here. Okay, so clearly this is what we should also be looking for. Instead of trying to really outthink this, it goes to show that ultimately what we are looking for are stocks that are doing exactly this type of a breakout. So breaking out to all-time highs on the RSI, and the MACD is also jumping to all-time highs. And one thing I need to point out here is there's also something we need to watch out. There seems to be a change in momentum when the MACDs move above zero for the first time. So there's a move above zero on the MACDs for the first time, move above zero for the MACD for the first time, and the MACD had already broken out. Let's call this breakout took place during this early breakout. So this move here in about April, May of 2013, right there, corresponds nicely with your RSI jumping to all-time highs, and the RSI, the secondary MACD, jumping to all-time highs and also jumping above zero. So there's also something about MACDs moving above zero for the first time. They tend to predict that the stock is about to really accelerate. And as you can see here, that was also consistent with the results, because the stock took off moving from about price level here of under $10 all the way to the 30s, to the mid 30s. So talking about this high here. So this move here is a pretty nice move. Okay, almost straight move if you take out these 3 months of sideways action. Okay, now something here we can also clarify a little bit, that you can also find your breakout that took place here just beginning of the year 2013, which is this move to new highs, and also the MACD moving to new highs. So we're talking about this period here. So the MACD jumps to new highs there, and so does the other MACD, and one of the MACDs moves to levels above zero, so which is this period and which is also this period here. And the stock did move well, it never looked back after that. So you can still adjust your entry point, and to find, the idea is you want to find stocks that are moving to fresh 3-year highs on the RSI and on the MACD. There's no other way of putting it. But what we are doing is we want to find stocks that are breaking out all-time highs. So all-time highs. The reason, as I explained earlier, is because stocks that are moving to all-time highs tend to have the most powerful period of their trading history. So in other words, you are buying the stock at its prime. Hope that makes sense. And that's why with the current breakout, personally doesn't really excite me as much. It's a good breakout. The stock has moved from, let's call it, about 36 to the highs of 40, 48 in about 3 months, and that's good. But the reason why I don't get too excited with this type of stock is because we are not trading at all-time highs on the RSI or on the MACD, so it doesn't excite me. I'm more excited by stocks that are moving to all-time highs on their short-term on their indicators. For example, take a look at DZZ, which we've been watching ever since it jumped above 8.49, right? And the reason why to me is more exciting is because we have a chance here of moving to 3-year highs on the RSI. Also a chance of moving above 61.8 for the first time ever. Is it going to happen? I don't know. And also we can see that the MACDs have a chance of staying above 3-year high levels. So that to me is more exciting than any stock that is not moving to new highs. Now, does that mean this one is going to work out? No, it's not guaranteed. But if it keeps on adding on to these gains here slightly and slowly, if it pushes its RSI above 61.8 and stays above it, then now it gets more exciting. Maybe, just maybe, it is going to start acting well, and we might see a nice move that might last a couple of months. And so that's why I say I would rather be hunting and fishing for ideas that are moving above 61.8 for the first time ever, as opposed to just buying a breakout just because. And that's pretty much concentrating on the most strongest part of any stock's move, and which is what we are talking about here with this strategy of looking for the ultimate move at the breakout, but with an emphasis on stocks trading with the potential of moving their RSI on the monthly above 61.8, and also moving their MACDs to all-time highs, and also potentially, if possible, above zero for the first time ever. We also spent some time looking at STMP, which just from calculating the buy point was here in the lower 80s. Of course, we missed that, and so we have to go find out where there could be a next possible buy point. And so we go and take a look at the weekly. We can see that the weekly recently moved above a recent weekly closing high at about 105, and it clearly seems to be a little bit extended, because then that would mean that if the buy point was at 105, then we have to go to about 110 so that the stock can be within 5% of a logical, reasonable buy point entry level. So slightly extended. You can wait for it to drop back a little bit to be within a reasonable entry point. If we take a look at the daily just to see whether we can get another buy point, we see that there was a buy point here again at about 105, and there's more recently a recent daily closing high there, the stock settled down for a couple of days and broke out. So you can even say, if you really had to chase this, really had to, I don't see a reason to, but if you had to chase it, there's a buy point here at about 107, 108, somewhere around there, and that means that this is still within a buy point range of the daily buy point. So do you want to chase it? You know, I'll personally prefer to use either weeklies or monthly charts, because chasing it on the daily sometimes can be a little bit more frustrating, because you're buying it a little bit removed from the ideal buy point, definitely on the weekly, and more definitely you're buying it well extended from its monthly buy point. So you know, if we determine and if we keep concentrate our energy on finding monthly breakouts and timely monthly breakouts, then we would have been in this stock many points ago, almost 30 points before the market, or 20 points before the market sees the stock as a buy on the weekly buy point. So I personally would rather train ourselves and train our methodology and scanning techniques so that we can find stocks that are breaking out on the monthly. Why? Because the monthly is always going to give you a better entry point. So I better stop the video there because it is already long enough. Shoot me questions if you have them, and I will see what I can do in terms of other things we discussed, so that I can make another video. Otherwise, enjoy your day and keep me posted if you have any questions. Let's keep this thing going. Eric Muadith, muadith.com. As always, good luck at your service. Peace and blessings. EACS.